I want to invest in real estate, and many of us actually have that big dream of owning properties in different locations, whether in Nigeria or outside Nigeria. But we are largely limited by funds. So the question now is, what's the best way to be a real estate investor? What's the best way to own property without probably going through the whole stress of documentations, land verifications, and at the end of the day, not even being exposed to government risk. For some of us that are in legal states, you know what is happening right now. So, but there is a better way to be part of this multi-billion naira market, at least for a start, and with your little capital. And that's by investing in real estate investment trusts. Now, in the Nigerian stock market, there are different real estate investment trusts that you can invest in. So real estate investment trusts are companies that are already recognized or regulated by SEC, Security and Exchange Commission. So they pool funds, they buy properties, and then they generate rental income. And by law, they are expected to distribute 90% of that rental income to shareholders. That's how they pay dividend. So one of my favorite real estate investment trusts in the Nigerian stock market is SFS Real Estate Sky Shelter Fund. Now, this company has a lot of property. You can see right here, they have Miverton Court Estate, Osapa, Lekki, and you can see the value in USD and in Naira. They have the Sapphire Garden Estate, they have the Bodylon Court, they have Cromwell Court Estate. Now, you can see the value of each property. Now, there are not everybody can afford it or pay for it at once, but when you they crowd fund or they pull funds from different shareholders or investors, they are able to do this and then distribute rental income. In April 2022, Real Estate Investment Trust was listed in the market around, I think, between 60, yeah, $66 and all that, 66 naira, sorry, and the share price dropped. Now, around April, we saw the share price resume its uptrend again. So in April 2022, Sky Shelter Fund was selling for between 69 to 70 naira in the Nigerian stock market. Not many even recognized the potential of this stock. Not many saw what was coming. And from that time till date, the stock has rallied from 69.70 to reach a high of 400 naira. So imagine that you invested, let's just use 1 million naira. 1 million naira divided by 70 naira per share. That would have given you 14,285 units. 14,285 units times 400 naira today. The 1 million naira invested in April would have turned to 5.7 million naira. Now, the question is, should I invest in SFS today, or what other opportunity do you think is available in the market right now that I can grab, like SFS? That's exactly what I want to teach you in this particular video. So here, I want to show you one real estate company to buy. If you missed SFS at 69.70 naira in April 2022, I want to show you one real estate stock to buy now, because I am projecting another massive uptrend on this same stock in the next 2 years. Now, they may not deliver exactly the same return as SFS, but because they are actually managed by the same company board, meaning that it is actually SFS that is managing this company. Now, one interesting thing I love about this stock is that when I went to SFS Real Estate Investment Trust to look at the board, who are the people managing SFS? And here, look at the names of the people managing SFS, leadership. We have the chairman here, Dr. Lai Fatana, and then you see the director, you see Dr. Yemi Colley, you see the MD CEO, SFS Financial Services, which is Yemi Benro, and then you see MD CEO, SFS Capital, you see Patrick, and then here you see the major executive director, SFS Capital. Now, these are the people managing SFS. So, and they have done extremely well. at least to have moved the company share from 69.70 to over 400 naira. Now, which stock is this? What particular stock are they on? Because these guys are actually on the same board, on the board of the same company. Now, when you are investing in the company, management is very important. I think I hardly share this on my YouTube channel. The people in charge matters a lot. You don't invest in products or building, you invest in people. So if they have done good, if they have done well managing SFS real estate, I'm taking the stock from 70 to over 400, and they are on the same board of this stock that I want to talk about, then you have to be very, very careful. You have to be very vigilant. Don't miss this kind of opportunity. Now, my recommendation is way beyond the board. This is just a major plus. Well, by the time we start looking at the data, the analysis of this real estate investment trust, you will now know why I think you should buy them at the current price. So let's continue. Disclaimer: the ideas shared in this video are based on my personal research and calculation. Kindly do your due diligence before you invest in this company stock. The stock market comes with a lot of risk due to uncertainties, and please vet my recommendation based on your risk profile. My disclaimers are very, very important. So before you invest or probably take any business decision based on whatever I share here, please do your own research. Now, don't also forget that we have glowfolio.com/today, where you see all the latest business headline. You don't have to sift through different newspaper or different websites. When you come here, you see all major business and financial headlines on one single page. And then when you click on them, the one that interests you, it will take you to the platform. So it's just headline. We don't copy their content. It's just for us to show you the headline, and then you can click through uh, to the website. So let's start. Investing in this particular company in real estate. Which company real estate are we talking about? This one here. This Nigerian real estate stock to buy. We hit new high in 2 years. It could even come before 2 years. But my estimate is that in 2 years, meaning if you are someone who is looking for long-term investing, that means you want to collect both dividend and also enjoy capital appreciation, this stock is it. And then I said it is on the undervalued real estate assets. It's an undervalued real estate asset with positive sentiment driving stock to a new high. That's my projection. That means the real estate assets are grossly undervalued, and I see positive sentiment driving the stock to a new high. So investing in this real estate today, this real estate company today that I'm about to show you, is like buying SFS stock for 69 to 70 naira in April 2022. As of today's close, the stock is 418, rewarding long-term shareholders with a whooping 497% return in 3 to 4 years. That means if you had invested in SFS in April 2022, today you should be up by at least 497% on your portfolio. Now, this is just capital appreciation. I didn't even factor the dividend because SFS dividend yield was around 14%. 14%. So meaning if you have been collecting dividend and the dividend you have been paying from April 2022 to 2024, and I'm expecting 2025 to also be higher, had been incremental dividend. So we didn't even factor in that dividend, meaning by the time you factor in return from dividend, you should be seeing an average of 500% return so far on your investments. Now, I posted a video on SFS real estate years back and why you should grab the stock at 111 naira 50 kobo with detailed data-driven analysis. Yes, on my YouTube, I posted it years back. This is it here. How to invest in real estate for rental income in Nigeria. You can see here without buying physical properties. This is it here. So if you missed that video, like I always say, my YouTube videos were not designed to just be useful at that moment. It's not a trending video. My YouTube videos are not trending. My YouTube videos are timeless, meaning whatever knowledge I share there, if you go back in the next 10 years, it will still be valuable. So take your time to watch this video. You will learn a lot on that SFS because I'm going to use the same strategy that I used to pick SFS to actually analyze this particular company stock. Now, Let's move on to the next slide. Now, if you missed SFS stock, you have a rare opportunity to jump on Union Homes Real Estate Investment Trust. Union Homes Real Estate Investment Trust, that's the company I want you to buy. That's the company I just recommended in my community. Now, look at SFS Trust in April. You can see right here in April, that's like buying Union Homes today. So let's even start with technical analysis before, and it's going to be very short. If you are following my technical analysis on the Nigerian stock market, you know very well that my charts are always very simple, and my tech analysis are just very, very simple and easy to understand. Now, this is Union Homes. You can see right here, we've had a major resistance since 2013. That's like 13 years ago. And that major resistance is around 50 naira. Now, look at how the stock dropped below it. That means it's been trading below that region. In short, Union Homes is a stock that I had never thought of buying. I would never even buy that stock if you tell me to go. This is the first time I'm talking about Union Homes in the Nigerian stock market. That's why I usually say that my recommendations in Nigerian markets is not based on subjective analysis or emotion. It's based on what I see on my screen and what I see on my charts. So I'm a subject of my own strategy. The Nigerian stock market is like a farm. You are like a hunter. You don't go to the farm and be looking for random meat to kill, or else the bushmeat will end up becoming the hunter. Do you understand? So, and then you'll be the hunted. So what do? You go there, set your trap, leave, and watch your trap do the job for you. So when I go to the market, I'm going to check my trap. And what's my trap? My strategy. So whatever stock that my strategy is presenting to me, that's what I'm going ahead with. So when I saw Union Homes, I was kind of like skeptical. What, like me, I don't say no, I don't want this stock. I'll have to dig deeper, carry out analysis. And when I'm doing my research, they are largely subjective. Now, look at how Union Home eventually broke out of this major key level that had been established in 13 years ago, almost 12, 13 years ago. You can see here, this is a major resistance in April 2013, and then see how the stock broke out. And then from that price, 15 naira, it touched a high of 82, pull back. Now you can see the same resistance is now turning support. Now you can see here, if you understand candlestick, this is like a bullish engulfing pattern. Look at this month alone is already up by 13.7, already engulfing this. So technically, and this is happening on a monthly time frame. That's why I said in the next 2 years. So when you see this kind of setup happen on a monthly time frame, because this is like a stock breaking out of its multi-year key level. Multi-year key level. Multi-year key levels are not ordinary key levels. They are key levels that have been established over the years. And here we're looking at a minimum of 12 to 13 years. So this is like a break and retest. That is one reason you should buy SFS. But let's now dig deeper into the fundamentals of SFS. Now, oh, sorry, Union Homes. I mean, that's the more reason you should buy Union Homes, not SFS. This is Union Homes. So we're talking about Union Homes right now. Now, Union Homes, and the symbol is UH REIT, UHREIT, a real estate investment trust, I think is grossly undervalued. When you look at the company's diverse real estate portfolio, we're going to look at it, the diverse real estate portfolio and specific key performance metrics aside from the real estate REIT recommended, you also learn. So aside from the fact that I'm analyzing, Homes Real Estate Investment Trust, you're going to learn how to find opportunities in real estate industry that can 2 to 3x your money. So aside from this, there are times where I don't know who is watching this video, but some of you might play in the real estate space, and maybe you have an opportunity to invest in a real estate company, and then you're not sure whether you should be investing or not. You can use this metric that I want to share with you to analyze their properties, analyze their assets, and then if you meet this checklist, go ahead and invest. As long as they are registered, as long as they meet the whole legal framework or legal documentation that you might expect. Now, from your own financial check, use this analysis that I'm going to share with you. If it passes that analysis, if it's a private company and they have data to prove what I'm about to show you, go ahead because there's going to be a lot of opportunity. You're going to make a lot of money in that company in 3 to 4 years. So this is like you learning why Union Homes real estate investment trust is a buy, and also understanding how to invest in a real estate company. Because I had used this model on SFS like 2 years ago, and today SFS, and when I was analyzing SFS right here, the stock was selling for 111 naira. So I was giving members of Portfolio another opportunity to key into that stock at 111 naira. You can go watch it and see my detailed analysis here, even though I'm using the same metrics right here. Now, as of today, Union Homes printed 59, although my recommendation in the Glofolio community was between 54 to 60. So 59 naira. And then I had allotted my Glofolio private members to pick rate at between 54 to 60 naira. A region. That's a region I consider a huge bargain. For some of you that are joining my ETC section, you can go check the stock on your charts to see why I also call the stock a buy around 54.60. Not like I've not seen the stock. I've seen it, but I've been taking my time to watch and wait for price to probably rise above my major key averages before I recommend the stock. Most of the stock you see me mention here, I already have them on my radar long ago, but I just wait for the perfect time to strike so that I don't just buy stocks that are like falling knife. I like them to move or to become a bouncing ball before I buy them. So that's a region I consider a huge bargain based on current valuation. Now, note this, based on my current valuation, I think that this is a huge bargain. And based on future potential, I also think it's a huge bargain. And considering the future dividend payouts of this stock, considering the future dividend payouts of this stock, I also consider it a huge bargain. Now, this real estate stock is well positioned to benefit from long-term property appreciation while offering stable cash flow from rental income distribution. Stable cash flow from rental income distribution. Before I tell you why I think Union Home Real Estate Investment Trust is a very good company to buy, let's now, because I'm going to be using SFS as a benchmark to analyze Union Homes. And I'm going to use the same metric that helped me to pick SFS at a lower price to analyze Union Home. But here's what I think is most interesting for me. Look at the management of SFS here. I had discussed this before. Now, did you know that these same guys that sit on the board of SFS leadership are actually managing Union Homes? Here is Union Homes. You can see here, Union Homes Real Estate Investment Trust. And then if you come down to About Us, right here, look at the management team. Now, can you see the same set of people? You can see the MD SFS Financial, Yemi Benro, on SFS Real Estate. You can see Yemi Benro here, also in charge of Union Homes Real Estate Investment Trust. Now, MD SFS Capital, Patrick, that is Union Home Investment Trust. Can you see here? And then this is Patrick right here on SFS. And then Dimeji, who is Executive Director of SFS Capital, is also right here. Did you see here? So you can see that the board composition, the leadership of SFS is also are also the one managing Union Homes Real Estate Investment Trust, meaning you should expect the same type of thinking. You should expect the same type of analysis, and you should expect the same type of strategy. Now, look at Union Homes property. Remember, if you cannot invest in physical property, you can take advantage of real estate investment trust to also be a part owner of different properties. We have the one at VI, Ikoyi, Lekki, you can see Lekki Aja, and in Abuja. And then here, they ask us to explore. So let's see. Now, the one in VI, you can see Savannah Court right here. You can see, so Continental Apartments and all that. So this is just an opportunity for you to be a part of a real estate company or take advantage of opportunities in the real estate industry without necessarily owning a physical property. Now, let's now go into the core numbers, the core figure. Everything I shared here is just to let you know that if SFS can move from 69.70 to 400, and we use the same metric that pointed that opportunity earlier on to analyze Union Homes Real Estate Investment Trust, then there is something you should be doing on real estate, Union Home Real Estate Investment Trust. That means you have another opportunity to key into a stock that will likely go up in long term. Now, how I assess Nigerian Real Estate Investment Trusts. So this is what we're going to use to analyze Union Homes. And this is what I expect you to use to analyze any real estate company that you want to invest in. We're going to subject Union Home Real Estate Investment Trust to a rigorous analysis. So this is not me saying because SFS board, SFS management are in charge, then automatically it's a buy. No, only that it gives me confidence that the same thought, the same thinking, the same strategy that they use to grow SFS is what they will likely be using on Union Homes. But let me run my own independent analysis to check if this company is one that we should pay attention to. Now, the first thing I check on a real estate investment trust is rental income. Are they generating steady, stable rental income? And are they also distributing dividends to shareholders? Very important. So I have already downloaded the financial statement of Union Homes right here. So from Nigerian Stock Exchange website, I don't source my financial statement from any other platform except Nigeria. My number one is Nigerian Stock Exchange because that's the first place where the document is uploaded before every other platform picks it. So you can see Union Homes right here, they're actually generating rental income. So total income, let's use the last result was September 2025. So that's what I'm going to work with, which is the most recent one. So in 2024, they generated 726 million naira, 200,000. That's total income. And then in September, it moved to 790. So I like to check the notes to account. Total income is not enough for me. Let's look at note two. Let's look at note two. All right, so you can see a breakdown of that total income. We have the interest income, rental income, and sundry income. Now, interest income is 74 million. Then you can see rental income, 511 million, 799, and then sundry income is 3971. 3,971. Then you can see also in 2024. So what did you see here? The bulk of the money are actually coming from rental income. If the bulk of the money is coming from interest income, let's assume interest income is 511,000, so 511 million, and the rental income is 274. Same thing here. I would not even invest here because one, there's a sign that there's a problem with their property and the business is being sustained by interest income, but it's not an investment company. So why would the real estate company be sustained by an interest income? What happens to their property? So you need to learn to spot certain red flags before you buy into any company. Don't say, oh, total income went from 722 to 790. That's a good one. No, run a breakdown, run a check, look at where the bulk of the money is coming from. If the bulk of the money is not coming from that core operation, the business of that company, then don't even try to invest in that company. So that's why I have to break it down to rental income. Fine. And then you know whom had been in business for a long time. So that's okay. Now let's look at dividend distribution. Has the company been distributing dividend? Yes, they have. And I found something very interesting um, right here. Now, look at SFS. Yeah, SFS closed at 59. You can see here, it's 59 here. So let's look at dividend history of SFS. So you see that SFS have been paying dividend sorry, Union Homes. Dividend history of Union Homes, dividend payment history of Union Homes. Now you can see from 2019, 2019, 2020, 2021, 2022, that's the one trading view can give us. So you can see the dividend payout, 1 naira 70 kobo, 1 naira 70 kobo, 1 naira 86 kobo, 1 naira 90 kobo, 2 naira 11 kobo, 3 naira 15 kobo, and 5 naira. So you notice that between 2019 to 2019 to 2020, 2021, they were paying 1 naira. And then from 2022, you see the increase, significant increase from 1.9 to 2.1, 2.1 to 3.1, 3.1 to 3. You can see that the company had been distributing dividends and as well as now increasing dividend payouts. You can see here, and that's exactly what SFS Real Estate Board started doing. SFS had been increasing dividend payout. They are generous with dividends. So you see it right here. And now, when you pay attention to dividend yield on Union Homes, now in 2017, you can see they've been paying dividend as far back as 2017. Now, 1.6%, 2018, 3.87, 2019, 4.3%, 2020, 4.58%, 2021, 5.2%, 2022, 5.74%, 2023, 8.61, and 2024, 13.8. This is dividend yield. And as of today, dividend yield is sitting around 9%. So last time I checked, except it has reduced based on, you can see here, dividend yield trailing 12 months is 9.35%. Now, what do you think future yield will be like? This is one of the highest paying dividend stocks in Nigeria right now. Very impressive. 9.3%. So the payouts are made manually, annually. The last dividend per share was 5 naira. The company paid out 5 naira. And as of today, dividend yield is 9.35%. And that's not bad. And considering the increment in dividend yield, you can see how dividend yield have been growing steadily from 2017 till date. What does that tell you? It means this company is generous with dividend. This company is looking to reward shareholders. So that for me is a major check, and you have to pay attention to rental income and dividend distribution. Before I start analyzing any real estate, if I don't see stability in their rental income, and if I don't see any sign that they are distributing dividend consistently, because for the fact that they are paying dividend consistently means that they are generating steady rental income. It's as simple as that. Because as a real estate investment trust, you are mandated to pay 90% of your rental income. So you can only pay your rental income, pay out dividends if rental income is coming in on steady ground or consistently. So this has been a sign that the company is generating steady rental income as well as rewarding shareholders. But this time, looks like SFS Real Estate Board took it to the next level entirely. And that's what we are saying here. That's why I said you shouldn't miss this part. Now, look at dividend yield plus share price growth. Very important. I've just talked about dividend yield of SFS Union Homes. Dividend yield is around 9 point something percent. So before you invest, when you compare dividend yield and share price growth, they have to be above bond yield. That's one thing I use to justify my long-term investing. When I'm investing in a stock for the long term, aside from the dividend that I'm going to collect, I also need to add all the necessary income, both from dividend and capital appreciation. Is it more than, will it beat inflation over a long period of time? And is it going to outperform inflation over a long period of time? So which of them offer better yield? This cumulative return from bond plus versus my dividend yield and share price. Now, if dividend yield and share price gives me better return, which is what I'm expecting, that's also the reason why I justify my investment in this Union Homes Real Estate Investment Trust. And that's what you should also look at. Now, let's now go to the core part of this analysis. Property yield. Property yield, very important. Property yield versus cost of debt. Real estate is not a business you can jump into. Real estate is a capital intensive business. So most companies out there, they borrow to invest in property. They borrow to buy property. So the question is, what is Union Homes property yield compared to the cost of debt? If I go to the bank to secure a loan of 200 million naira and the bank is charging me an average of 40% on that 200 million. So 200 multiplied by 0.4. Then it means I'm going to pay back 80 million as interest. So at the end of the payment period or payback period, I'll be paying the bank 280 million. So if I'm going to use that money to use the 200 million to build a property or buy a property that I intend to rent out or do business with, the rule of thumb is that the return on that property must be far more than what I'm paying the bank. So what I'm paying the bank is the cost of debt. The interest on that particular loan, the cost of debt is 80. Do you understand? The cost of debt is 40%. Sorry, 40% as the cost of debt, which is 80 million. So the question now is the project, that property that I'm buying, what is the yield on that property? What is the yield on that property? So if that property is giving me 10% as rental income, that means at the end of the year, I'm collecting 20 million as rental income, but I'm supposed to pay the bank 80 million. Does that make sense? No, the spread is negative. The spread on that property is negative. This was what I did when I was analyzing SFS Real Estate Investment Trust. Let me show you my Excel sheet. I have a standard real estate portfolio sheet. Don't worry, I'll find a way to make it available, but not free. If you want it, let me know. But here is SFS. When I analyzed SFS, SFS was still selling for 111 naira. You see the share price here. See the share price here. Look at it here, 111.50 kobo. This is SFS now. So I try to compare the property yield. You can see the property yield of SFS was around 7.05%. This is it here. And the cost of debt of SFS, what's the cost of debt of SFS? Zero, meaning they were carrying no long-term debt. That means that project was fully funded by shareholders' funds, not bank. So property yield minus cost of debt will give you what we call the spread. And the spread has to be positive. So now let's look at the property yield of Union Homes Real Estate Investment Trust. I've already downloaded all the financial statement here. So it's easier. Now, if you go to Union Homes financial statement, just go to corporate disclosure. So they have this particular key performance index that they release. You can see SFS Capital, they're the one managing Union Homes. So I like this report. Some of us are just interested in financial statement. Don't look at other documents that can review opportunities. Now, look at the current yield, property yield. You can see these are the list of all the Union Homes real estate investment trust property. McDonald Court, Savannah, you can see a contemporary apartment, Olive, Continental, Charter, Amina Court, Lock Apartment, Victoria Crest. Now, look at the yield on each property. 6.4, 7.83, 6.4, 9.93, 5, 9.1, 6.83, 10.64, 6.41. What is current yield? The yield here, we're looking at the rental income, the return on that property divided by the cost of that property. Now, this is above average because if you go check the average yield on property on the island in Nigeria as a whole, they are between 4 to 5%. There's already a projection that property yield will continue to drop as long as the asset itself goes or go up in value. And real estate company hardly increase rents every year. So that's why if you find a real estate company that has an attractive yield like this, don't joke with it. So what's the average yield on this property? So let's do the calculation. 6.44 plus 7.83 plus 6.4 plus 9.93. I'm adding the yield on all the property plus 9.19 plus 6.83 plus 10.64 plus 6.41. So you can see here that's 1, 2, 3, 4, 5, 6, 7, 8, 9. So 9. So everything is 68.67 divided by 9. 68.67 divided by 9. So you can see that the average yield on Union Homes property is 7.63. 7.63, that's the average yield. 7.63. So let's even create, let me pick one here. So UH rates. So the average property yield is 7.63. So let's come here. Property yield here is 7.63. That's the average yield. So if you look at other check, just look at it, you can see gross income, yes, net property income, dividend per share. The company passed these three because they have a steady income flowing, evident by the dividend paid so far. Yes, we're going to look at this later. Now, dividend yield is 9.35. We just looked at it on TradingView, 9.35. Now, property yield is 7.63. What are we looking for? We want to look at the property yield against the cost of debt. This is very critical. Now, what is the cost of debt on Union Homes? Cost of debt means, are they carrying a long-term liability? Is there an interest expenses on their financial statements? So we will look at it. Now, on the note to account, we have interest income. Do we have interest expenses here? So let's go back to our P&L account on Union Homes. So you can see we only have total income distribution. Now, look at finance charge. It's supposed to be interest expenses. Can you see right here is zero? You can see here, we only have the numbers here are just total income and distribution. Finance charge is zero, meaning they are not carrying interest expenses. Assuming they have a finance charge here, which is interest expenses, I would have come to the statement of financial position, which is the balance sheet, to look for their debt position, total liability, sorry, the total non-current liability or long-term liability. You can see liability here are just current liability. There's no long-term liability here. So if they had been long-term liability, some will call it debt, some will call it borrowing, whatever name they call it. I'll just divide the interest income by that liability. That would have given us what the cost of debt is, which is the average interest on their loan. But right here, Homes, a finance charge is zero. On their balance sheet, there's no debt. So it means that Home cost of debt is zero. So here, cost of debt is zero. So if cost of debt is zero, then it means the spread right here will be your property yield less our cost of debt. So that tells you that yield is 7.63, which is great. Now, the yield here is like if you have watched my video on how to analyze banking stocks, net interest margin. Remember what I always talk about on net interest margin, what the bank is earning on the loan and advances that they give out to customers, which is their interest income, and then what they pay you as a customer or what they pay on customer deposit. So the difference is what we have as net interest margin. Do you understand? And then the net interest income. And then when you now look at the spread is the cost of deposits against their interest income. That's the interest income, money they earn from for giving out your deposit as a customer to other particular customer. And then when you now compare that interest income against interest bearing assets, so the same way, there's no, you see, this is just common sense. There's no need for you to start saying, I'm not a finance student. No, just learn. I'm sure once I'm done with this video, you will learn a lot here. So look at the property yield. How much are they earning from that property on average compared to the interest they are paying on the debts that they are carrying as a real estate company? So right here, you see that Union Home is carrying zero cost of debt and property yield average is 7.63. You can see right here, we have the documents here. So I don't have to go to the properties in different locations. You can see one is in Ikoyi, Victoria Island. They have their documents here. That's one good thing about investing in the stock market. Corporate disclosure, they must disclose everything to you as a shareholder of that company. So they passed this one. Then the other one is debt to assets. Real estate is a major project, like I told you before. Now, assuming they are carrying debt, you also need to look at the risk. What if they default? So there are some real estate companies that when they default, it becomes a problem. Look at some of the major real estate companies in the world, like the one that happened in China. Some of the major reason is that when they carry debts that far exceeds the value of their property, it becomes a major problem because the property is standing as an asset. At the same time, it's also a collateral. So I don't want to see a real estate company debt to exceed 40% of their assets. 40% of their assets. So right here, you will see that on SFS, 35% of its debt is 35% of its asset is tied to debt. Let's assume that your asset is worth 10 million, right? And you secure a loan of 15 million from the bank, but the value of your real estate project is 10 million. That's a risk. So when I ask you to give me a list of all the properties you have, what's the value of that asset? You give me. Now, when you're looking at the value of that asset, you also need to look at it at cost first. That's the modest way to look at it, at cost. Because it's only for me, I think the property value, they are, yes, even though they are being determined by professionals, but you also need to put yourself on the safe side. At cost, for me, will give you that leverage that you need. And you will see how that leverage applies right here and how I use that leverage on SFS Real Estate Investment Trust. So I do not want a real estate to carry debts that far exceed, because when it's time for them to pay back and they're not able to pay back, all they need to do is to dispose some of their assets. So imagine that 35% of their assets can actually pay back all their debt. That's also a way to avoid the problem, meaning that they can actually dispose of some assets, pay their debt, and continue. So the remaining asset can at least provide rental income for shareholders. So the rule of thumb for me is that the debt to asset must not exceed 40%. 40% of your assets must not be exposed to debt. Maximum of 40% of your assets is exposed to debt. Anything beyond 40%, it's a problem for me. So if you come to Union Homes Real Estate Investment Trust, look at their total assets here. Total assets is sitting at 11.9 here, and then you can see investment properties 9.4. 9.4. So the question is, what is their total debt? You can see there is no major debt here. Rent received in advance, these are current liability. Do we have any long-term debt here? Zero. We do not have any. So that tells you that the debt to assets of Union Home is zero. Debt to asset is zero. Can you see? So SFS was 0.35. Union Home is zero. This is SFS here. This is SFS here. So for some of us, this is it here. This SFS, this is Union Home that we are analyzing right now. So it means that Union Home is actually carrying zero debts. That means most of the projects are largely funded in-house. Shareholders fund. That's what it means. Shareholders fund. And I think one of the signs that they are carrying they have a lot of cash is even the interest income that I'm seeing here under the note 2. Note 2. If you go back to note 2 under total income, you can see interest income of 274 million. Where is interest income coming from? Maybe they have exposure to fixed deposits. Maybe they have investment in treasury bill. Maybe they have a lot of cash, and instead of that cash sitting idle, they decide to invest it in a money market fund. That's why you're saying this interest income, which could be a sign that they have a lot of cash. Because from all that we've seen so far, no debt, and that no debt is positive because debt to asset is zero, and then cost of debt is also zero. So this is a company that is largely funded by shareholders funds, and they're generating above average return. Look at property yield, 7.63. Go and check every property in Nigeria. So people are even struggling to earn up to 10%, except they move into short legs, and then it has its own challenge. But this is a company that is doing well. So look at SFS. SFS was 7.05. And this guy is sitting at 7.63, which is even above what SFS reported when I analyzed it 2 years ago. Let's continue. Now, interest coverage too. Now, the interest coverage here is you are looking at the earnings before interest and tax divided by interest expenses. In short, the company is not even carrying any debt, meaning that interest expenses is zero. So this already a check for me. Now, look at tenancy and occupancy rates. This is very, very important. Why would I be looking at tenancy and occupancy rate? This is where the money is coming from. If no one occupies that property, how would they make money from rental income? That's the thing. And the occupancy rate is key. When a company is struggling to fill its property with tenants, occupancy rate is low, 10%, 15%, it's going to affect rental income. Because the more people fill that property, the more you can predict, the more that rental income is stable. And the more the rental income is stable, then dividend yield will also be high. Dividend payments, dividend payout would also be very, very high and consistent. So on their corporate disclosure, we also have this here. Look at the occupancy rate here. Occupancy rate is sitting at 100%. You can see 100%, 100%, 100%, 100%, 100%, 100%. Then this is 80%. That's the Abina court. And this is 100%, 100%. So which means that most of the properties are occupied. And you know what it means? If all the properties are occupied and length of tenancy is annual, then it's a sign that there's going to be stable flow of rental income. If I see 5%, 10%, 2%, 50%, which is then that's a sign that the company is struggling to fill that property. And if you look at the average age, property age, 15 years, 15 years, 14 years, 14 years, 14 years, 10 years, 1 year. This is a sign that this is the newest project, Victoria Crest at Aja. And guess what? It's already fully occupied. He just completed this and it's fully occupied. And then who are the tenants here? You can see individuals, individuals. So this is like residential. Residential. If you are saying maybe corporate, then it means it's office or mall. So these are residential apartments. And you know what residential apartment is in Lagos. Population explosion. The bulk of this property, they are in Lagos. Lagos, Lagos, Lagos. We only have two Abuja. And you see what is happening in Nigeria as a whole, population explosion, residential. People are looking for where to stay. Property rent is going up every now and then. And these guys are boosting 100% occupancy rate, which pass this tenancy and occupancy rates. This is a major pointer that this will continue. If this is going to continue, then this is a major. I mean, a lot of people ignore this. The company will just give you that report and say we are collecting rental income, but you don't look at the foundation of that rental income, which is tenancy and occupancy rates. You can see the numbers are here: occupancy rate and tenancy rate. So, and then look at the property type: blocks of flat, blocks of flat, blocks. So it's already evident that these are residential apartments. And then you see terrace. Annual. Once a tenant leaves, definitely someone is coming in. And this is what I saw on SFS too. Occupancy rate was very, very high. And that's a sign that there will continue to be rental income. And for rental income, you have your dividend payouts. And then what is the fair value of Union Homes Real Estate Investment Trust? This is where it gets more interesting. What's the fair value? Union Home Investment Trust is selling for 59 naira. The big question is that fair? Am I paying a fair, am I buying the stock at a bargain price, or am I just buying at any price? So I usually use the net asset method to value a real estate company. I use the net asset method. When I analyze SFS real estate using net asset method, the company net asset per share was sitting around 300 naira, while the market price was around 100 naira. And there are more important revelations that I want to show you that is also making me feel or see this particular stock as being undervalued, which I also used on SFS. So, Union Homes, what is the fair value? What's the net asset per share of Union Homes? To calculate the net asset per share of Union Homes, let's quickly call up Union Homes financial statement again. Now, here we are looking at the total assets less the total liability of Union Homes. So this is total assets here. Total assets, already we have the figures. Look at total liability here. So net assets of Union Home is 10.35 billion. 10.35 billion. That's using the net asset method. 10.35 billion. Now, when you divide this net asset by their current ordinary share, outstanding share, that will tell you what the net assets value is per share. So let's look for, I like to use this to calculate it. So total income is 621,669,000. So 621,691,123. Yes. Divided by 3.3. 3.3 is basic earnings per share. So this tells us that Union Homes has 1.8 billion. 1,888. So you can see here. So this is 123, 123. Yes. So averagely 1,883,000. 123, 123. This 1 billion. Okay, this taking out this. Let me do that calculation again. Let's do that calculation again. It's 1,888,000,000. So 621,691,123 divided by 3.3. So here is 1 billion. Yes, 1,883,912,000. Yes, 1, 2, 3, 1, 2, 3. I think it's 183 million. Yes, 188 million. 188 million. So I'm trying to copy this. 1, 2, 3. 1, 2, 3. Yes, 188,391,000. So 188,391,000. 391,000. So 180. I want to just have this on my head. Okay, let me note it down somewhere. 188,391,212. 188,391,212. 391,212. Yes. Okay. Now, what is the total assets of that company? Net asset, sorry. So net asset here is 10,350,868. Remember, they are all in thousand. 1, 2, 3 divided by 188,391,212. So you can see here that the net assets per share, you can see net asset value per share of Union Home is sitting at 54. You see, 54. I divided 10,350,868 by the odd number of ordinary share. That's now giving us 54. What is the market price of Union Home? What is the market price? You can see it's at yesterday open, it was around 54. It opened at 54 and then it closed at 59. So the question now is, no, don't you think is overvalued? Because the market price is 59, right? And the net asset value per share is sitting at 54. How did I arrive at 54? Net assets value divided by the number of ordinary shares. You can see here. This is where it gets more interesting. 54. Now, I want to show you something. Look at the investment properties of this company right here. 9.2 to 9.4. 9. Remember, they just completed one property. So you shouldn't be surprised that the value went from 9.2 to 9.4 because it just completed one here, Victoria Crest. You can see just 1 year. So you shouldn't be surprised. Now, but here's where it gets more interesting right now. This investment property here, they are real estate. And remember, the value of real estate appreciates. So meaning if this property is carried at cost, what would be the value of Union Home if we price in the market value of this property? How did I know that? Let's now go to SFS Real Estate Investment Trust. I want to show you something very interesting here. This is SFS Real Estate Investment Trust financial statements here. Now, so there are things you will not find there that you need to come to SFS Real Estate account. Now, this is note 4. You can see this is investment property note 4, right? So let's go to note 4 on SFS Real Estate. So this is the secret. Now, these are the properties of SFS Real Estate. You can see the value here. You can see the value here. The value of this property, the cost of this property is, you can see cost, 1.9 billion. But here is the note to account. The cost model is used in the measurement of investment properties. This is SFS, which means that on this particular Union Home financial statement, the cost model is what they are using. Remember, the same management, the same thinking, the same analysis, and the same strategy. All right, so let's continue here. The properties have a combined value of 3.5 billion by Ubosi, Ele and Co. Estate Surveyor and Valuer. Valuations were conducted in December 2023 and March 2024. Two properties were sold in Miverton and Bodilon, respectively. Therefore, the new value of the property, the remaining property, is 3.3 billion. They are carrying these assets at cost, but the real value of this asset is 3.3 billion. Meaning, if you take out this and you plug in 3.3 billion using the net assets method. So what is the increment? 1.9 to 3.3. 1.98 minus 3.3. That means property increased by 1.32. 1.32 divided by 1.98. It means that this property have appreciated by an average of 66%. Can you see here? This property has appreciated by an average of 66%. So let's go back to Union Home, which is the core of this explanation. Now, this is investment property, which is carried at cost. The cost model was used, but they did not tell us what the real value is based on. I'm sure they will also be working with the same estate valuer. So if this property appreciate, which we know is one of the major perk of real estate, property appreciation, long-term appreciation. So if this property appreciates by an average of 50 to 60%, so 9.4 times 1.6, then it means this property should be worth 15 billion, at least in the next 3, 4, 5 years. The property should be worth 15 billion, minimum 15 billion, meaning this property would have added an average of 6. Now, let's now use the net asset method to now revalue this 6 billion. Now, if we add 6 billion to the net asset here, 6 billion, it means this will be 16 billion 350,868. So this will now be 16 billion 350,868, 123 divided by 188,3912. Let's look at the number again. 188,3912,212. So did you see that? Yes, 188,3912,2, 188,391,212. Yes. So it means that Union Home should be fairly valued at 86 naira. 86 naira based on the fair value. Because this particular company is tied to real estate markets. They are not carrying debt. Cost of debt is 0. Look at the interest. So let's come back to this place. You can see here, property yield 7.63, spread 7.63, cost of debt 0. And based on the net asset value method, the company is selling for 59 and net asset is 54, which is fair, meaning that as at the opening, market opened, the company was selling right on its fair value. The company opened at 54 naira. The company opened at 54 naira. Let's see if we can find that here. Homes. You can see here, open 54. That means the company opened at the exact net fair value. The exact net fair value. So that's why I quickly alerted everybody in the Globfolio community to go and buy this stock between 54 and 60 naira. But those that keyed in at the exact fair value are very, very lucky. Because the average, the fair value using the net asset method is 54. That means you are paying exactly what the company is worth. And remember, there's room for growth. The property that your investment is tied to is going to appreciate in the future, meaning it's a no-brainer that the share price will definitely go up. That's why I said this is a very good real estate investment trust. So you can see it closed at 59. Now, it doesn't mean it to close up again. If the company drops back to 55, 54, 53, 52, you'll be picking it at a bargain price. I'm going to buy more of that company share. So meaning the company is actually sitting around its fair value right now. Now, based on the fact that property appreciates, the new valuation. So if they are to release the property value as shared on SFS Real Estate Investment Trust, you can see here, this is the cost model. Now, the value of that property is 3.3 billion. On the financial statement is 1.9, but the value is 3.3. Now, on the financial statement right here is 9.4 billion. Question is, what is the real value of these investment properties right now? Because property appreciates. Property appreciates. So I only applied a modest increment of 60%, which is not even in the next 3 to 4 years, which could even be higher. And the fair value right here is 86, meaning that Union Home is worth 86 naira per share. 86 naira minus 59 closing price of today will give us 27. 27 divided by 59. almost 45%. That means there's a standard 45% upside potential on Union Home. This is share price appreciation. We've not even factored in dividend payments. So you're collecting dividend of 9% on average, and then you have a 45% upside potential. That's a solid long-term investing. And for some of us that like to hold for at least 5 years, 10 years, and all that, you are so long-term investment makes a lot of sense. Like I always share, when your doubt is zero and your clarity is 100%, you're using data to look for opportunities in the market. So my take on Union Home is tied to the fact that this property is grossly undervalued. They are carried at cost. Now remember, the company is not going to sell this property at cost. It's going to dispose this property based on what they think, what estate value I think is worth in the market. And these are the properties here. So your investment is tied to the value, the market value of this property, the market value. Now look at the number of properties this company has. 9 properties. 9 property. Delinquency rates on rent is even 0.6. You can see here, which is very low. Default ratio is very, very low, 0.6. Occupancy rate is 100%. Look at the current yield. So looking at all that I use to value a real estate company, this is one sure company you should be holding right now. You can see how Union Homes comfortably passed all our check, from rental income to dividend distribution, dividend yield and share price growth, property yield versus cost of debt, debt to asset and interest coverage, tenancy and occupancy rates, fair value using net asset method. If any real estate company is coming to you to say, come and invest in us, we'll pay you XYZ return every year. Use this to analyze, use this to tear the company down and tell me if you will not make you would always this is but you're not using emotion. Don't let them deceive you and say, oh, we have property in highbrow areas, but that's not enough. That's not enough. What is the source of fund on that property? What source of fund? Is it shareholder or bank? If it's the bank, can I have a document to show that? Can I confirm from the bank to show that? What have you presented as collateral and all that? What is the rental yield on this property? And how much are you paying the bankers? It's enough to tell you whether you should be investing or not. And what's the debt to assets? A company that is being careful, being efficient, will not want to secure loan, will not want to be exposed to debt that exceed 40% of the value of the asset. Because if everything goes bad, and it starts selling its asset to pay debt, you don't want a situation where a company will sell all its assets, or 50 to 60% of the asset had already been used to, what's the remaining 40%? And here on Union Home, we're talking about zero, meaning there is no debt at all the assets are fully owned by the company. It's not tied to any financial institution or any loan or collateral. That's also safety for you as a shareholder. That's safety for you as a shareholder. So when you're looking at a real estate investment trust and you want to find a good one to buy, this is what you should do. This is what I did on SFS Real Estate. And SFS is also the one running Union Home Real Estate Investment Trusts. You can see, go to About Us. You even have similar website design. You have the same management here. You can carry out your independent check. So meaning the same thinking, the same strategy, the same logic is what they are going to apply on Union Homes stock. Union Homes right now is selling at 59. You can see 54 is around this region, meaning that the company had been trading below that region for a long time. And now you can see, based on technical analysis, the company is trading around its fair value. So in 3 to 4 years, I'm so certain that Union Homes will go up, because the future value of this company far exceed what is currently. And based on my estimate, Union Homes shouldn't be selling for anything less than 86 naira. Because as the value of property appreciates, then the net asset method should tell you that the fair value of the company should be revised higher, which should also drive the share price higher too. I hope you got value from this section. And if this is the first time you're watching my video or coming to my channel, kindly hit the subscription button. And if you want to join our community, one of the advantages of joining our community is that you get to enter this kind of stocks earlier before I even come here. I bought my Union Homes entry is around 54, 55, max 57, 54, 55, 57. Because when you immediately market opened yesterday, I quickly alerted everybody, go and buy. Why I didn't post it earlier before market open is that a lot of people are complaining that they are not able to buy the stock, maybe because we have deep pocket investors in the community and all that. So I said to post the stock when market opens so that people have please access to the same information at the same time. And then if they want to buy, they can go to the market at the same time to buy. 54, 55, because there are people that already put the stock on sale. So when they see us buying, 50, my major entry were 57. Entries were 57 and selling 59. So access to early opportunity like this is what your portfolio subscription will give you. The truth is, people are complaining that the amount is high, but I don't if you want, I don't respond to such question because many of you don't look at value. You look at price. You have a whole year to buy into a stock, to buy into recommendations that have been proven to deliver steady return. Look at the ones I posted some days back. Look at the one on MPF. Look at what MPF is doing. Even the one I mentioned on McNichol, look at what he's doing. You can go through my channel to see some of my recommendations and all that. One recommendation alone will give you your money, except you are coming to the market with 20,000 naira. That's why you think that 150 is very expensive. Please, in my community, we deliver more value. We just had our monthly webinar for January, and then I'm looking forward to February. I host monthly webinar January, February, March to December. January, February, March, December. So you cannot imagine the value of that webinar, and you're paying 150 to access it. Please, if you are not ready to join the community, you don't have to drop comments that are discouraging. That's the essence. You can keep your comment to yourself. It's as simple as that. Don't come to the platform and start dropping comments that are discouraging. The way you think is different from some others. You're not coming to the market with the same capital. So if your capital is not enough to pay, you can stay back and maybe follow me until you feel you have built your capital. So I know some of you that join my community by following my recommendation. You made money from my recommendation on this YouTube channel, and then you pay to join the community. And since then, you've seen your portfolio has been on a steady growth. So if you want to catch the hottest stocks benefiting from macro trend in 2026, go to bluefolio.com/subscribe, pick a plan that works for you. We host monthly webinar and share market insights before the media. Thank you.